Hello and welcome to part 2 of me asking ChatGPT some of the business finance questions. Like I said in the previous video, I prepared 10 questions in total, and last time we stopped on question 3, so let's tackle the next question. And it's actually a question about client profitability, so I'm really excited about this one. Okay, here is our ChatGPT open, and it's exactly where we stopped last time. So let's ask it our next question. How do you calculate client profitability in a service business? Let's talk a little bit about this so that you know my take before you see what ChatGPT responded. So when it comes to calculating client profitability, you really need to know two components, the revenue part and the expense part. The revenue part should be relatively easy. It would come from your invoicing or however you record revenue. For example, if you do revenue accruals. The expense part or cost part, from my experience, is not that easy for a lot of companies. The main issue is you need to be able to track all of the hours that the team logs to a particular project and hence to a particular client. But not everybody does this at that level of detail. However, if you already do this for invoicing, for example, if you invoice based on time and materials, then you should already have this information. Now, the most challenging part is to find the cost, because you know the hours, you know people's salaries from payroll, so now you have to marry the two together. And that can be a little bit tricky. In a nutshell, what you should do is you should take the annual salary of a particular person for who you wish to allocate the hours. Or you could also take the actual pay that they received in that particular month for which you're doing the calculation, divided by the total hours expected from this person for the month. And after doing that, you'll get their hourly rate. Now it should be relatively easy. Just take the number of hours that this person logged for the project or client that you're working on, and you multiply it by their hourly rate. Now you just have to do it for all of the people that worked on this client that you're calculating the client profitability for. And if you do not have the tools and the software that makes it easy, that could be a little bit of a challenge in terms of manual work, pulling the hours information, the payroll data, making all of those calculations. You'll probably end up doing this in Excel, but you will be able to get this information. And if you do this for all of your clients, then you will understand the client profitability for every one of your clients, and you will be able to see who of your clients is the most profitable one, who actually costs you money, and what you could potentially do to make the adjustments to improve this. Okay, let's see what ChatGPT says. Okay. Excellent question. Client profitability is critical in service businesses because revenue can look good, but some clients quietly drain resources. Yeah, I would say that's true. You could make revenue, but then if you look at your bottom line, it's not much of it that you end up keeping. That probably is that there's something not working well in the expenses part, or your revenue is too low. Okay, here's how you calculate it step by step. Steps to calculate client profitability. 1. Start with client revenue. We are aligned here. Total fees billed to the client over a given period, monthly, quarterly, or yearly. Yeah, I usually recommend doing client profitability, calculating client profitability on a monthly basis, just so that you can keep track of the changes month to month, especially if your business is a time and materials model and your monthly revenue for client tends to change. If you are a subscription type of billing or sort of a retainer one, then you probably won't see a lot of changes in revenue, but you might see changes in expenses. So I still recommend doing this monthly. If you can't, or if it takes too much of your time or resources, try to do it at least quarterly. Include retainers, project fees, and any pass-through revenue if applicable. Retainers and project fees, yeah, you should include all of the fees that you bill to the client for the work that you've done. I disagree on the pass-through revenue because pass-through revenue implies that you bill the client for an amount and that's the same amount that you paid. So the margin that you make on this is actually zero unless you include any sort of markup for the pass-through costs. But the name pass-through implies that you pay them and pass them on to your client without any sort of markup. So I don't see any point in including those because you will then need to also include them in your costs. They cancel each other out. Why would you? Just focus on the revenue that you bill your client for the work that your team has done and the expenses that come from your direct costs, meaning probably most likely your team's hours of work. Do not include the pass-through costs unless you have any sort of markup on them. Example, client A pays 100,000 per year. If you do this monthly, take the actual revenue that you recorded for this client A in the month for which you make the calculation, or the quarter. 2, deduct direct costs. Cost of services. Yes. These are the costs directly tied to serving the client. Staff hours, salaries, benefits, or hourly billing rates allocated. Yes. So costs, as we talked about it, mainly consist of your team's hours. So to be able to understand the cost, you need to take the hours, multiply the hours by your team's direct costs. So that will include, yes, salaries, including the benefits. So when I was talking about the cost, I forgot to mention that the cost that you take should be loaded costs. So you should include all of the fringe, meaning you take their salary that you pay them. Then you also need to take all of their benefits costs that you pay for them, all of the payroll taxes, all of the 401k match if you have one. So all of those direct costs that you end up paying for your direct teams, for the teams that produce revenue, you would record them in the cost of goods sold or cost of sales. You should take all of those costs and include them in your hourly rate calculation. Contractors/freelancers used for that client. Yes, 100%. When I talk about the team, I usually mean all of the people that work on that client to who you pay. So that includes all of your employees and also contractors as well. And with contractors, the same logic applies. If you pay them a certain amount per month, then you take this amount and you divide by the hours that they worked and so on. If you have a contractor that's fully dedicated to a client, then it becomes easy. You just take all of the amount that you paid to them in a month and you allocate the cost to this client. Travel software or tools specific to the project. Yes, that is also true. Travel in my experience usually ends up being a pass-through, because if you travel to a client or if you send your team to visit the client on site, usually the client ends up paying for it. So you pay for your team's travel, but then you also bill the client. So it ends up being a pass-through expense, which, as we talked about earlier, should be excluded. Software? Yes. As long as you don't bill the client for the software and it's a pure cost to you and it's only specific to this client or this project, meaning your other teams in the organization and other clients do not use it at all, then yes, include that. Or same with tools specific to the project. Example, 1,200 staff hours times $50 per hour equals 60,000 direct labor. Yeah, it's a generalization. We should really go person by person here, because everybody's going to have different salary, different loaded costs, and different hourly rates. So we should take all of the team's hours separately, times all of their individual costs per hour. This will give you the total indirect labor. 5,000 contractor costs equals 65,000 total direct costs. Yeah, that's a generalization, but that gives you the gist, even though it doesn't explain really how you should arrive at this, but okay. Allocate overhead, indirect costs. Oof, no. No. We do not include overhead in our client profitability analysis. So what we're trying to get here is our client margin or client gross margin. Gross margin implies that you take your revenue and your direct costs, you leave overhead alone because it's below the gross profit margin line. I've seen some of my clients do it this way, and I understand where it's coming from because all of your CPA training teaches you how to allocate the overhead costs. There are a lot of methods to do this, but in real life, if you're looking for pure value in your numbers, you don't need to allocate overhead costs to all of your clients, simply because it's not client specific. So if you're looking to compare client profitability among your clients and to understand which client makes you money, which client does not make you money, who's the most profitable, overhead has nothing to do with it. Only your client revenue and your direct team costs play part in this. I'll give you an example. Imagine a client who's underpaying you, meaning you've sold them a contract 3 years ago, you never raised the price, the market moved on and up and increased their prices, but they're still getting the same value from you at the same price. Payroll costs increased, so you pay more to your people to do the work for the client. Chances are your client margin is low. This is a result of your revenue. Another scenario, you bill your client the market rate, but the client is super demanding, or your team is not organized. Either way, they end up spending a lot of additional hours a lot of additional work. So a lot of the costs that you pay for your team end up going towards that client for the same amount of revenue. More than you expected initially, more than you probably scoped. Your client profitability is again going to be probably low in this situation. Another scenario. You moved to another office building and now you pay 50% more rent. That's an overhead. So based on ChatGPT's logic, it needs to be allocated to this client. Now, nothing changed in your relationship with your client. You still bill them the same revenue. You still have the same people doing the same work for them, allocating the same amount of hours, and you end up paying them the same amount of money. What does you moving have to do with this client and your team's performance? Nothing. That was a business decision. Yes, it will end up impacting your bottom line, your net income, your EBITDA, but when we talk about client profitability, nothing in that equation changed. So again, similar to pass-throughs, why would you want to include something that does not have an impact on the equation? So I am against allocating overhead, and it's actually even simpler for whoever's doing this exercise on your finance team, because believe me, allocating overhead is a major pain in the butt. But let's see what ChatGPT wrote. Even if not client-specific, yeah, it even mentions that it's not client-specific, overhead needs to be shared fairly. Why? I understand if you're looking to allocate everything, all of the costs in your organization. Why? Options. Pro rata by revenue, client's revenue divided by total revenue times total overhead. Yeah, that's one of the ways you could do this. That's what they teach you when you take CPA. By hours worked, client hours divided by total hours times overhead. Example, overhead allocation for client A, 15,000. Why? Okay, let's move on. Ooh, formulas. Fancy. 4. Subtract discounts or write-offs. If you gave fee discounts, free extra work, or had unbillable write-offs, factor them in. Okay. Discounts would already be excluded from your revenue. So when you take all of your revenue for the client, you take your net revenue, which would be net of discounts. So this, what it includes in step 4, that should be done as part of step 1. Free extra work. What is free extra work? You just take all the hours that your team logged and you include it as part of the cost. How do you measure free extra work? I'm sorry, ChatGPT, but that's complete BS. Or had unbillable write-offs. Same thing. If it's a cost to you, include it. You take all of the costs, you compare with revenue, you get the client profitability. It's easy. Example, 5,000 worth of unbilled revisions. What is unbilled revisions? What does it even mean? Revisions in work? Well, if it's work and you didn't bill for it, also, unbilled kind of means that you intend to bill it at some point in the future. So if you want to say that you will never bill for it, we call it unbillable. But even with that, if it's work that you've done, you paid the cost, you allocate the hours times the hourly rate, you get the cost. Step 4 can be completely excluded. ChatGPT, I'm disappointed. Step 5, calculate profitability. Client profit equals revenue minus... ChatGPT likes to overcomplicate things sometimes. It should really be client profit equals net client revenue minus direct costs. And then client profit margin, yes, client profit divided by client revenue, not all revenue, client revenue, times 100. So that will give you the percentage. Example, revenue 100,000, costs 65,000 direct costs. Exclude overhead. What is even write-offs? Again, if you wrote off some of the revenue, for example, if you sent an invoice for 100,000 and the client comes back to you and says, I need a write-off because you guys screwed up everything. So you send them an updated invoice for 95,000. Your net revenue recorded will be 95,000. Or if you send them a credit memo for 5,000 so that they can include it next time they run their accounts payable and they issue a check or payment to you, your net revenue will still be showing 95,000 for this client. So you don't include 5,000 write-off in a cost. It's not a cost. It's a reduction in revenue. Sorry for the rant. Then you calculate your profit by taking your revenue and subtracting your cost, which should only be the direct cost that you calculated as part of step 2. You get your profit, client profit, and then you calculate your client profit margin. Yeah, that is correct. Okay, why it matters. Some big clients may actually lose money if they overuse resources. Yeah, we talked about this. If some of your clients end up super demanding, if they constantly cause scope creeps, or again, if your team is not really efficient and they end up doing the work, messing up and having to redo this, and you're not able to bill for it more than you originally agreed with the client, then you will end up not having great profitability on this client. Helps identify which clients are worth growing and which need renegotiation. Yeah, that's the whole point of even doing all of this. You want to understand which of your clients are best for your business in terms of the profit that they bring, and which clients would need potentially some tweaking. Or it's also good to understand how your team is doing. Because if your team ends up dumping a whole lot of hours when the revenue is relatively small, then you see that there are some adjustments that you potentially should make. Informs pricing and resource allocation. Yeah. Pro tip, many service firms set a minimum profitability threshold. Example, 20-25% margin. Again, because ChatGPT is trying to include the overhead over here, then it becomes your net margin. But what we need really is a gross profit margin. So for service businesses, and again, I mainly work with digital transformation agencies, with marketing agencies, with service agencies, really. You want your client margin to be around 60-65%. Between 50 and 60 is okay-ish. If it's below 50, that's not great. Again, because you need to also factor in overhead, yes, and you also need to have some left over at the end of the day because you as a business want to make profit and want to make money. But we talked about why overhead in this equation of calculating client profitability does not make much sense. Clients below that level trigger a review. Either fees increase, scope reduces, or the relationship may not be sustainable. Yeah. Okay. To be honest, I was not sure what to expect from ChatGPT when I asked this question. But now that I think about it, again, given my experience with some of the clients, I'm not really surprised. But what frustrates me is if somebody is legit looking for a way to understand how they can calculate client profitability in their business, and they reach out to ChatGPT, and ChatGPT gives them this beautiful 5-step plan, they will end up with A, extra work, B, information that's not entirely useless, but is not what we do in the industry, really. And it's just so overcomplicated that I can see a lot of people reading this and maybe trying this and then being like, what the heck? Why do I even bother? So yeah, I'm glad that I asked ChatGPT. And now that I know what it thinks about it, I know what I think about it, and I know what I will continue telling my clients and explaining to them the benefit of doing it the way I described. Stick with the gross margin. That's your main source of data that is usable, that is relatively easy or easier to obtain, and it will have a ton of impact on your business. Okay, this was fun. I liked it. Not that I like trashing ChatGPT, but sometimes it just has those funny hallucinations or it gives funny answers that I just like to react to and discuss. Okay, I think this would be a good place to stop. Since those questions and the answers that ChatGPT gives us are relatively detailed and require some discussion that takes time, I thought it would be good to actually break out this whole topic into a series of videos and maybe dedicate one question per each video just so that it's easier to digest and you don't have to sit through and watch it for hours. If you liked it and thought it was useful, please hit like. And if you want to see the next part where I ask ChatGPT about reports and KPIs that a business needs to be tracking, stay tuned and please subscribe so that you don't miss it. Thanks for watching, and I'll see you in the next video.